rewarded. I want to bring in now BD8 Capital Partner CIO, Barbara Doran. And listen, I guess the question is, where are we on a chart like this, right? I think we're like, closer to the beginning of the Nifty 50, closer to the beginning of the dot-com era. Many think we're at the peak.
Yeah, I mean, Charles, that is the issue of the moment, isn't it? We've seen incredible volatility since the beginning of the year. And I think we're actually in the reindustrialization in this country. I mean, we're still going to have a big service economy. Right now, it's 3/4. But you look back in the late 50s, 60s, that was when we had a booming industry, CapEx paid off, high ROI, there was real productivity increases. 70s started to see us offshoring, getting rid of industrialization, and we became asset light, service oriented, and that's been continuing until relatively recently. So I think when you see what's happening with AI and the demand for data centers, electrification, the grid, even defense spending is really up. So I think there's a lot of real manufacturing going on.
I'm with you there. I mean, I know that these charts, I think we're at the point where they turn higher, and so it's premature to start making moves. And plus, let's bring up the other chart, right? Ultimately, for society, we know we need it to compete in the world. We know we need it for defense, and of course, corporations need it. The productivity boom right now the United States has enjoyed is going to could get actually a lot better. Greenspan used to talk about the productivity miracle a lot.
Yeah, no, I think that what you've seen, even had Greenspan in one of the last meetings a few months ago, talked about the productivity at 2% and how good it's been pre-AI. And that's really been the robotics, which has been very strong the last decade or so. And so I think now you're starting to see companies adopt it. We know we're early on it. You've seen the Metas of the world who were very early, but the rest of corporate America is just beginning to figure out how to deploy it. What do we do? So the productivity increases, that line could go way up.
I hope so, and I think so. All right, let's talk about the dilemma, though, for individual companies, right? And that's, okay, sources and uses of financial capital. On one side, you have your sources, business operation, asset sales, also equity issues and debt issuance. On the other side, capital uses, right? So for a long time, it's been about share buybacks. And as we reallocate this to CapEx, I think this is phenomenal. Personally, and it's so funny, people used to complain about all the buybacks. I guess the question, though, is the debt issuance, it seems to be a red flag for some.
It is, because it's been like when you're looking at the share buybacks, cash dividends, that's the service economy. You have so much cash flow, but you don't have other things you want to deploy it. And that's what you're seeing right now with the hyperscalers. They have tons of free cash flow, and they're going to continue to generate huge flow. So even though right now it's taking up a big percentage,
but what about companies issuing debt? Does this change your thinking on that?
No, it depends on the company. If it's like Oracle is a question, because they don't have the gigantic free cash flow. And so they are levering up. And so they're making a bet that they're not going to be too late to the party. And they probably aren't right now, but I think I don't worry about the Metas, of the world. Yeah.
So you've been a fan of the Metas and the Mag 7 names. Okay, the question now is, and I think some folks who've been short this, the debate has been return on invested capital, the life cycle, if you will, right? So return on invested capital, you have the traditionally introduction, you got the growth phase, the maturity phase, and then, when it all starts to shake out and decline. Is this period any different than past periods? Some are saying it's a shorter, more compressed cycle.
Well, see, I think it is not different from past cycles in the sense that that is the nature of any industry. You have this kind of curve to eventually it declines, but it's not going to be short-lived. That's where my disagreement is, because the demand for AI is exponential. As people figure out how to use it, it needs more power, more this, more that, and that's going to be a long cycle, much longer than the markets. You see NVIDIA trading in a market PE. That's crazy.
Yeah, I mean, it really, really is hard to fathom, and I saw a list the other day of how much money companies will make in the next 5 years, and Google, I think Google's at the top of the list, like $5 trillion. Like, these numbers are mind-boggling, and to think that these stocks are actually struggling. So in the Mag 7, most of those names you're still long. You've liked them for a long time. You're still in those.
Yeah, and we've suffered through this over the last few years, where they run up, the valuation is full, people take profits, and that's certainly what you've seen, I think, since the year began. You've seen the outperformers are energy, staples, industrials, although that's a real fundamental change, and so those kind of names, that's really, you're going after the laggards, and that's a rotation that'll be short-lived in my view.
Okay, so don't take that potentially low-hanging fruit. I'll talk more about that too from a value perspective. A lot of these stocks look cheap relative to maybe other things, but from an absolute basis, they're actually pretty expensive. Let's talk about some newer ideas, okay? Microsoft feels like, everyone's kind of like, okay, what's wrong with Microsoft? It's kind of getting thrown in there with the rest of the software group that's under pressure.
Yeah, it really is, and that's what we've seen since this last 3 to 4 weeks of a sell-off. And we know the behavior of the market. They throw everything out and then figure out, oh my gosh, that really does. The fundamentals haven't changed that much, But Microsoft is a case in point. They just reported earnings. Stock traded down after that, but that's because their cloud part, which is great growth, it was up 29%, and it would have been even higher. But they have big internal needs for that.
Right.
That's a good thing. That shows the demand is everywhere,
Right.
and they're booked out for some time to come. And that's that's a classic. And so they're also embedding Gemini and their AI in all their 365 ecosystem, which is huge. You can't get away from it if you subscribe, to any Microsoft thing. So I think the stock at a 22 times the market PE, it's typically 30.
It sounds like a screaming buy.
I think it's a great value here.
All right, so cybersecurity is also, in the age of AI, seems like a slam dunk. Palo Alto reported last night. It's one of the biggest, I think it's the largest decliner on the S&P today because of guidance. CrowdStrike in sort of the same boat. It seems like an easy story, but it hasn't been smooth in terms of execution.
No, it hasn't. And CrowdStrike is the leader right now. They continue to innovate, and people, again, it got thrown out, in terms of the software. The stock is down about 13%, year to date. But this is cybersecurity. You're not going to do your own homemade AI. And so they just get bigger and better. And so I think that one's also a very good value in here.
Shopify is a name that's been intriguing for a long time. It makes wild swings, but it feels like they're doing everything right. Some would argue, though, that maybe it's expensive. Some would argue that inconsistent execution, but you like it here.
Yeah, I do. Again, it's down 23% year to date. And why? Again, because they think, AI and disintermediation, but actually they've been integrating AI agenics into their sales. And for the fourth quarter, their orders using that were up 15 times normally. And they're, the 98% of their customers are small to medium-sized businesses. They don't have the wherewithal to do the one-stop shopping from inventory sourcing all the way to fulfillment. So I think it's, it continues to be expensive. It
really is amazing. I don't think people realize, I talked about this last week. At one point, AI-threatened companies were down 29%. AI-enabled companies were down 20%. To your earlier point, if it's AI is in the conversation, good or bad, they're crushing it. But that's how you get these opportunities.
You got it.
Absolutely. Great stuff, Barbara. Thank you. Very appreciate
Nice to
it.
see you.
All right, folks, coming up.